have a very special guest. It's Matthew Bates with Movement Mortgage, and he's here because we've been bombarded with questions, through the internet, through phone calls, in regards to these interest rates. Okay, people are a bit nervous. They think that with the rates climbing, that the housing market could come to a halt. I disagree with that. I think it's actually a healthy thing. But, we're bringing in the expert who's qualified to talk about this. Matt, thank you for being with us today.
Thank you. Thank you for inviting me.
You're very well. Thanks for showing up with such short notice.
I do what I can.
So what's happening out there, Matt? Rates are going up. People are nervous. What's going on?
Okay, so post-election caused a bunch of uncertainty with the stock market. And when there's certainty, the 10-year bond gets a little stronger. And when the 10-year bond's strong, makes the interest rates go up. So recently, there's been a big increase in interest rates. And it's important for buyers, either potential buyers that are thinking about buying in the near future, or people that have already gotten pre-approved in the past couple of months and haven't bought anything yet, need to get in touch with their loan officer and see how their pre-approval changed as far as a monthly mortgage payment. Because an increase in rate, a quarter of a point, half a point, depends on the buyer and the situation, and the buyer's certain things to do with, FICO score, the down payment, what type of loan product they're doing, all the different ingredients that happen to be in that particular buyer's profile need to be revisited after the rates increase.
Matt, you're right. Rates are pretty volatile right now, up about 0.25%.
That's right. They're changing, and sometimes they're changing three times a day.
We're over 4% right now.
Over 4%
for a conventional
for
30-year fix.
Even for an FHA.
Really? FHA too?
Yeah. Yep.
Federal Housing Administration.
Yes.
3.5% down, guys.
So that change, every time the rate changes an eighth of a percentage, you're looking at it between a $13 and $20 increase in your mortgage payment
per month.
Per month. So if it's changing a quarter of a point, we're at $40-$50. Now that starts to become a big impact on someone's monthly budget. So you really want to figure out, and maybe possibly when you started out the process, you were looking at a conventional mortgage, because the mortgage payment was acceptable and you were more interested about PMI. Now with an FHA mortgage, you might get a better rate. With an FHA mortgage, you might reconsider your loan product, switching over. You would really want to talk to your loan officer about that before you go under contract, because you want to know exactly what you're getting yourself into when you put an offer in.
So let me just throw this out there. Every quarter of a point basically you're looking at around $15,000 over the course of a 30-year mortgage.
Exactly.
Does that sound right?
Yeah.
Okay, guys. So let's talk a whole point, okay? When mortgage rates go up a whole point, because they will, when they get to 5%, that basically means you're looking at buying about a $60,000 less home when it comes. And I don't know if this is accurate, but maybe a $50,000 to $60,000 less home, which will put you in that different house, that different neighborhood, with different things.
Oh, for sure.
And I don't think that home prices are going to change all that much, because the only ones that are, in my speculation, are the higher end homes in Rhode Island, 500 plus.
Right.
You're going to see prices come down a bit to correct so that those people can still afford those, but the homes between 200 and 400,000 aren't going to change much, because the people that could have bought in the higher ranges are now coming down lower.
Well, also when you see a change in home price and the purchase price point, I think that happens over a long-term period, and this is a sudden change. Sure. So like people that have their house on the market for the last couple of months, two months or whatever, they're not going to suddenly change the price of their house just because rates went up.
Yeah,
they're going to keep it at whatever price.
I wouldn't suggest to do that.
Right. They're not going to do a price drop. So you're buying the same houses that are in the same inventory that you were in before the rates happened, before the election.
Yep.
And now you're in a post-election scenario. They're not going to suddenly change so that you can afford them for your interest rate. You're just going to have to change what your monthly, what you're looking at for a purchase price. Overall, what's really important is that you definitely want to revisit the loan officer. You definitely want to revisit what your rate is doing to your payment, and understand all the ins and outs of it. You might consider buying down the interest rate to get you back where you were before.
Yep.
And what does that cost? How much is it going to cost you?
2 points, right?
Exactly.
Okay.
And and open up to that conversation at all. Obviously, you don't have to do anything that you're not feeling comfortable with or doesn't, isn't something that you're not capable of doing. But at least you can have the conversation and know what your options are.
Yeah, I think that's you should definitely be doing that, especially like you said. If you got pre-approved 2 months ago, things have changed. If you haven't been pre-approved yet and you're out there shopping, you need to get pre-approved. You got to know exactly what you should budget for. And a lot of times we tell you, you might be pre-approved for $300. Let's look to see if we can find what you're looking for at $225, $250. Why not? Okay. Sometimes you can. Some of our clients do. They save a lot of money per month.
Oh, exactly. And another thing is I've had a couple of recent conversations with buyers that I just would like to tell, anybody that's listening that these rates are changing. So when you're talking to your loan officer and you were at 4% a couple weeks ago, and now he's talking to him and you're at 4.375 or even 4.5.
Yep.
A sudden change in that, they're like, well, what happened? And they think that I'm just increasing the rate because I want to.
Yeah, no.
No, these rates are definitely changing, and they're definitely changing for the worse most of the time. Sometimes they get a little better, but they changed, and they change on a frequent basis. So when I'm saying that this is the case, this is really the case. I'm not trying to pull your leg.
No, not at all. You can Google this stuff. Simple, and if you missed some of this segment and you'd like to check it out or any other part of the show, you can check it out on theroundtableradio.com. Now, if you go on that website, theroundtableradio.com, go to the contact section, you can ask any type of question you'd like about, finance or about real estate in any areas, from mortgages. A lot of people have questions there, to home inspections, to anything, to financial planning. We've got somebody in our network that can help you out. Okay, so we'll point you to the right direction.